Forget charts for a second. Forget candles. Forget indicators, patterns, and everything you were taught to look for. At its core, the market does one thing, and only one thing. It auctions price. Every single tick is the market asking one question. Is this price acceptable? That's it. Not, is this bullish? Not, is this a breakout? Not, is this support or resistance? Just acceptance or rejection. Think about a real auction. A price is proposed. If buyers and sellers agree, business continues there. If they don't, price moves fast. Markets behave the exact same way. When price is accepted, it stays. It rotates. Volume builds. Time is spent. When price is rejected, it doesn't hang around. It moves with urgency, searching for the next place where trade will happen. That's why some levels feel sticky, and why others get blown through like they never existed. Speed matters. Time matters. Distance matters. Most of the time, the market is balanced. Balanced doesn't mean flat. It means two-sided trade exists. Buyers and sellers are both active. Price rotates. Ranges develop. Nothing urgent is happening. This is where most traders get chopped up because they try to force direction where none exists. Imbalance is different. Imbalance happens when one side becomes aggressive and the other side stops responding. That's when price moves, not randomly, but deliberately, searching for a new area of agreement. And here's the part most traders miss. Imbalance doesn't come out of nowhere. It always starts when acceptance fails. This is why breakouts fail so often. Most breakouts are nothing more than auction tests. Price pushes higher. The market asks, is this higher price acceptable? If participation doesn't increase, there's no follow-through, no continuation, no urgency. So price rotates right back inside. That's not manipulation. That's not stop hunting. That's the auction doing its job. Breakouts only work when acceptance follows expansion, not before it. Every auction ends the same way. Either price is accepted and holds, or acceptance leads to expansion and continuation, or the auction fails. Price tests an area, finds no agreement, and snaps back to where trade was active before. There is no fourth outcome. Every setup you've ever traded fits into one of those categories, whether you realized it or not. Where traders get lost is simple. They try to trade outcomes. They want the breakout, the reversal, the trend. But they ignore the process that creates those outcomes. That's why they're always late. They wait for confirmation that only appears after the auction has already been decided. This is where Harmonia comes in. Not as a signal tool, not as a prediction engine, but as a map of the auction itself while it's happening. Because once you understand the auction, the next question becomes obvious. How do you measure acceptance objectively? Not with feelings, not with hindsight, not with random lines. You need structure. In the next episode, we're going to define equilibrium, the most misunderstood concept in trading, and why everything meaningful in the market expands away from it and eventually returns to it. No indicators, no setups, no bias, just the rules the market follows, whether you're trading it or not.